Just to take us through some of the important filing, payment, and reporting dates between today and our next webinar, which will take place in the second week of November 2023. I can see we have a lot of filing dates that are upcoming that we've highlighted in red. So if you can just take us through that.
Yes, thank you, Yolisa. And yes, October is a very busy month, and there's a lot of due dates applicable to taxpayers in this month. So we're running through those. Income tax. The 23rd of October 2023 is the submission due date for a return that is submitted electronically through the assistance of a SARS official at the SARS office or manually. That's when you submit the return at the SARS office or submit a return manually. The very same date is also the submission due date for a return for non-provisional taxpayers. And I want to interrupt myself there. It includes trust and is submitted by using the SARS e-filing platform. It's very important for tax practitioners to determine the status of a taxpayer, either a provisional taxpayer or non-provisional taxpayer. And it's very important to take cognizance of the fact if the taxpayer was a provisional taxpayer in the previous year, it's not to say for this year of assessment, the 2023 year of assessment, that the taxpayer is still a provisional taxpayer. The same rule applies even if the taxpayer made some provisional payments. SARS is determining on assessment if the taxpayer is a provisional taxpayer. And if you don't accurately determine the status of a taxpayer, you can run into problems with administrative penalties for the late submission of a return. So, yes, this is a first cut-off date for the first lot of taxpayers for the 2023 year of assessment. Then on the 25th of October, that's a manual VAT 201 submissions and payments. Then also at the end of October, there's an important due date, and that is the end of the biannual third-party submissions. That's normally the banks and the medical funds and the funds submitting information to SARS. That's the cut-off date. For tax practitioners to take note of the 31st of October cut-off date, the end of the employer interim 501 reconciliation submissions. Very important. If you miss that date, SARS implemented some administrative penalties even applicable to the interim EMP 501. So it's very important to get those reconciliations into SARS at the end of October. If you haven't done it, I think you must do it as soon as possible. Then on the end of October, the 31st, is also the electronic VAT 201 submissions and payments. And then before our next meeting on the 7th of November 2023, it's the EMP 201 submissions and payments. Thank you very much, Yolisa.
Thank you so much for that, Cecile. And I'd like to remind our members of the Murphy's Law that tells us that anything that will go wrong. And we've seen this many years where, unfortunately, people wait until the last day or the last 2 days to submit their returns. And more often than not, those systems are not working or they crash because there's too many people on the servers. So I would implore that all those taxpayers or all those tax practitioners who still have outstanding returns for their clients do so as soon as possible and they submit those returns to avoid those glitches and to avoid missing those deadlines. Right, moving along to some of the challenges in the SARS operational space. In August, I believe it was the 14th of August, 2023, SARS implemented some enhancements to the e-booking platform on the SARS system. And since then, there's been a number of challenges that were identified and that our members continue to experience. Now, when SARS announced those enhancements, they also published the guide. And in that guide, they indicate that appointments would be available in a 60 calendar day rolling period. So if we're looking now at about the 10th of October when we're recording the webinar, maybe the appointments would be available up until around about the 10th of December. So we know that because of capacity constraints, some of the branches do not have appointments available for up to 8 weeks at a time. So, and also you're unable to choose your own telephonic branch. It's all centralized. So taxpayers are struggling with appointments, specifically where a service offering is not available via a different electronic process.
And then supporting documents and cancellations. It's very important that before the enhancement of the e-booking system, supporting documents had to be submitted on the SARS online query system. The enhancement in October or in August entails that a practitioner or a taxpayer must now submit the supporting documents on the e-booking system. And if the supporting documents are not submitted to SARS 24 hours after the booking has been made, the appointment will be cancelled. This is very important that those supporting documents must be uploaded on the e-booking system as soon as possible. Otherwise, that appointment will be cancelled. Thank you, Yolisa.
All right,
Yes?
so this would mean, for instance, we know that with trusts, unlike a company where a tax number is automatically issued at CIPC, the master's office does not have that interface. So you have to manually actually request a tax number. So if you wanted to book an appointment to sort something out for that trust, you wouldn't actually be able to do that before the registration of the tax number is successfully completed. Am I understanding that correctly?
You're quite correct, Yolisa. And over history, SARS did not capture the trust registration number. And it can happen that the trustee or the practitioner then runs into problems because this income tax number is then not generated. And I will advise taxpayers to update that information on the SARS systems. I'm confident that you can do it on the RAF 01 form to update that trust registration number.
Okay. All right. Thank you so much for that, Cecile. The second challenge that we actually identified in the past 2 and 3 weeks about is a challenge with the RLA onboarding and entity merge function. And this is specifically for customs. So the entity merge function, although made available on e-filing, is not actually operational. And the only way that the entity merge can be done is via an online appointment. So obviously, we've just now indicated, Cecile, that online appointments have an average of about a 7 to 8 week lead time. So
the most fundamental part is the fact that if taxpayers who are registered for customs have not conducted the FICA processes, and SARS actually has now commenced on stopping shipments coming in and going out.
New procedures, systems, and SARS implementation. I know it's been 2 months rather than the monthly webinar because last month we had the tax indaba. We did touch on this enhancement to the e-booking system, but something that's very big, Cecile, we know that SARS is forging ahead with its modernization drive under the banner of Vision 2024 of a smart SARS. And on the 8th of September, they published a VAT modernization discussion paper for public comment, which basically details the purpose of this modernization drive. It discusses some international benchmarking and potential legislative amendments which would be required to achieve this new VAT framework under the Tax Administration 3.0, which would basically see SARS collecting VAT and I think also corporate income tax data in real time as transactions are taking place. So obviously, as the tax landscape continues to evolve, it is our responsibility as tax practitioners to also evolve in our skill set to make sure that we are still offering services that are of value to our clients.
100%, you're right, Yolisa, that's very important.
All
But
right.
but I want to agree, this is going to change the landscape of individual tax tremendously for non-business individuals.
Okay. Now we're going to move over to our main topic for the day, our expert corner, where we're looking at South African tax residents working abroad and the factors to consider when declaring the income and filing the ITR 12 return. As you've heard in the introduction, Ms. Brits, you will be taking us through some of all those considerations. So at this point, I will be moving the slides for you, but you're more than welcome just to take us through some of those, and where we have questions, we'll pose those to you. Over to you, ma'am.
Thank you, Yolisa. I'm just going to scan through the topic overview for today. We're concentrating on natural persons. The companies will follow in another webinar. So for now, we will concentrate on the starting point being the test for ordinarily resident, the beginning and the ending of ordinary residence tests, and then the physical presence. As part of the physical presence, we will also talk around the beginning and end of a physical presence test, and then we will look into DTA double tax agreement considerations. Once we have dealt with that part, we will also look at cessation of residency and CGT implications of ceasing tax residency. And very important, we will put quite a bit of focus on the ITR 12 completions and the pitfalls that we currently face when we have member queries, as well as some tips on tax directives in the retirement annuity or retirement income area. Thank you. Let's move on to the next slide. So the very important aspect of residence is that South Africa is a residence-based system, tax system. So we will look at the definition of a resident, which is really defined in Section 1 of the Act. The definition of a resident also distinguishes very clearly between a natural person and a company. But importantly, when we talk about a residence, it's very important that we distinguish when will a DTA come into play. So yeah, I can cite for you an example where a number of South Africans work in other countries like the Northern African countries, and he still has a home to where he returns to after all his wandering, and exceeding 915 days in the aggregate during the 5-year of assessment preceding the current year of assessment. This test is very, very important when we deal with swallows. So again, we urge the members to know their clients and ask the right questions. So a person may very well have a scenario where he rents out a house in South Africa and there's SA sourced income, but he's a non-resident for all other purposes. And then he visits South Africa and by default could actually stays longer and by default then can come back into the South African tax net. So again, we stress tax practitioners to ask the right questions when they deal. We had some technical discussions in this forum, but the practical realities are sometimes very different when one deals with filing the form. So our starting point is, first and foremost, I can say that SARS have issued a new guide for IT 12 completions in June of this year, and that the members must take cognizance of that. But in this particular forum, we've tried to touch sides on some of the critical points that we must give attention to. And this is the questionnaires. When one looks at the standard questionnaire and the comprehensive questionnaire, and at what stage do we move on, it's important that you look at every single aspect of those questionnaires and look at them very, very carefully. Because if your yes and your no's are answered incorrectly, you are going to get a different outcome. The long and the short that I can emphasize that over and over is, please, members, know your client, ask factual questions. This will lead you to the correct answers.